Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Faika Binti Basa. My matric number 2017534, section 3. And I will present introduction the effect of technology innovation on banking sector. The effect of technology innovation can increase in financial industry on the banking sector, especially in this modern era. Electronic banking is the most popular aspect amongst all over the world. The technology innovation impact banking sector include internet banking, mobile banking, automated teller machines and investment in computer service. The banking sector is the most important financial market that needs technology innovation due to developing the new forms of existing banking products that are offered to its customers in an effective way. Technology innovation is the modern solution in people nowadays that meet new and existing requirements in articulate or existing market needs. The meaning of innovation can be defined as the idea of new improvement products or services that can help communities develop in the most effective way. Innovation includes original invention and creative use and defines innovation as a generation, admission and realization of new ideas, products, service and process. However, technology innovation on bank performance will focus more on the technology aspect of a product or service that address needs a requirement or resolve issues that simply did not exist previously in the banking sector. The main purpose of the implementation of technology innovation in the banking sector is that system payments and permanent payment instruments must also be under bank's supervision to ensure their safety, efficiency and trustworthiness. Thus, it is regarded as one of the most important tools capable of influencing both the economic and banking sectors. This is because new projects or ideas can cause banks to be risk-averse. If a firm or project is considered risky, the bank may impose a higher interest rate, which a small business can afford or refuse to lend at all. As a result, it is believed that technology-based electronic applications such as internet banking, mobile banking, telephone banking, automated teller machine (ATM), and point-of-sale (POC) networks provide significant benefit when providing existing products and services to consumers. Hence, there are some numerous examples for the banking sector to present existing product and service to consumer satisfaction. For instance, it allows banks to offer new service channels via new electronic platforms like e-banking, virtual banking, and service points like e-branch, stores, POC, while also lowering operational expense by reducing the number of physical stores and employees they utilize. However, nowadays, digital transformation is most recently used by people in performing transactions through internet banking platforms such as e-wallet, Shopee Pay, Boost, JomPay, Do It Now, and others. It may bring significant advantages to customers and facilitate lower risk, which is to not bring large amounts of money everywhere safely due to digital transformation. People can use these apps to do transaction from another bank to another bank as long as they have an internet connection with lower cost banking operation for 24 hours to 7 days. It can tell that technology innovation bring positive effect in bank sector, which is customer can reducing cost, low risk and save their time if they are using internet banking channel. As a result, customer can do the operation using online banking without any physical touch that can lead to customer being exposed to contagious disease like COVID-19 that currently happen this day. Many processes in bank institutions are acceptable to remotely through internet technology, which is in central units rather than retail outlets. The majority of the workforce and bank employees work from home because COVID-19. Despite the fact that effect of innovative technology on the banking sector maximize benefit and advantages for customers, there are some technical issues and disadvantages regarding some internet connection in between transactions. The effect of online banking that some people can access our personal data due to some lack of security and usability. There might be some issues and challenges regarding this innovative technology that are the main problem for some customers. As a result, scammers will easily target to steal money and personal information. customers must provide credit card and payment account information, as well as other personal information like online. This information is sometimes transmitted in an insecure manner to get our phone number and account number. That's all from me. Thank you.
Assalamualaikum, my name is Shaimat binti Muhammad, metric number 1823934. I will be present on the literature review. This section aims to explore prior research related to the effect of technological innovation in the banking sector and further emphasizes the potential contributions from the present research. The literature review will be divided into two parts. First, the technological innovation and its relationship with banking performance, and second, the acceptance of innovation in the banking sector. The technological innovation and its relationship with banking performance. Based on the earlier studies as cited in Hilal 2015, a scholar found that there is a positive and significant relationship between technological innovations and bank performance. Then he further expressed that the higher the level of technological change, the higher the profitability of the bank will be. This also proved by a study stating that technological advancement helps the banking industry to expand geographically and facilitate both national and international level of expansion by reducing the distance-related agency costs. Another scholar said that the convergence of internet banking and mobile networks within the bank operation will create both opportunities and threats. The operating banks in Lebanon that adopted e-banking innovation succeeded in developing the quality of products and services offered to their clients. Thus, the commercial relationship with clients has been enhanced and becoming more valuable. The global cost of the banks also has been reduced at the same time. According to a recent study by Tunay and others in 2018, their findings from the analysis of accumulated data of 23 developed and developing economies documented that the increase in the use of electronic banking technologies has impacted positively on profitability and impacted negatively on costs. Then they recommended that the banks should increase their investment in technological improvement in order to have a higher financial performance. The examples of technology-based electronic applications comprising mobile banking, telephone banking, internet banking, automated teller machines, ATM, and point-of-sale POS networks, which offer remarkable advantages while presenting existing products to the customers. Therefore, customers can easily access any types of banking products at a lower cost per day compared to the standard way. In this regard, the commitment to the branches can be reduced as much as possible. Furthermore, prior studies also have focused on the effects of electronic and internet banking applications on bank performance for both developed and emerging countries. For the developed countries, electronic and internet banking influence significantly and positively on the bank's performance and in the development of competition in the banking sector. Researchers reported that the result of emerging countries are consistent with developed countries, and it encourages those innovative banking platforms to be practiced in developing countries. They also concluded that electronic banking practices reduce the operational cost of banks and increase their performance based on profitability, which was relatively similar with developed countries. However, some of the developing countries have a negative influence on the profitability of banks due to their customers still depending on the traditional distribution channels like branch-based bank services. Next, the acceptance of innovation in the banking sector. Due to the aforementioned advantages gained by the bank sectors through the technology innovations, in some cases, there might be emergence of doubts on the acceptance of these digital technologies. A study has been done in Greece to analyze the acceptance of the innovation of the digital technologies among the bank employees. The outcomes of the study reported that the majority of the respondents agree that digital transformation in the banking sector allows them to do their work easily and to carry out a larger volume of work in a shorter time due to its usefulness and easy to use. Thank you.
Hi and Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Shahira binti Nordin. Now I will be presenting on the part of discussion and critical analysis. First of all, we issued 68 questioning to the respondent for the purpose of integration. The survey has been distributed in order to examine either the technology used in bank service will affect the bank performance. Firstly, we will look at on the technology innovation in facilitating the task services to bank service. So here from the table, respondent were asked to indicate the level of agreement on how technology innovation in facilitating the tasks related to the bank service. So it was found from a majority of respondents, which is 75%, who strongly agreed that technology innovation able to facilitate the tasks related to bank service. 19.5% of the respondents agree that technology innovation will make the bank service easier. And then it was found that a significant to note that 4.4% of the respondents were neutral on contribution of technology innovation to the bank service. And only 1.5% of respondents disagree that technology innovation will make the task on bank services easier. Hence, this finding agree that the creation or improvements in technology and the development in process or system able to facilitate the task on bank service. Now, second, we will look at on the response on ATM usage in branch and bank performance itself. So here from the table, respondents were asked to indicate their level of agreements on whether the level of ATM usage in bank branch has influenced the bank performance. So the data revealed from the majority of the respondents, which is 51.5%, strongly agree that level of ATM usage in branch has contributed to the bank performance. So it was shown that approximately 33.8% respondents agree ATM service can lead to the higher bank performance. So the study revealed that approximately 11.8% respondents chose neutral on the contribution of ATM usage, while only few disagree, about 2.9% that believe ATM usage was not the reason which influenced to the higher of bank performance. Then, according to Mogi and Karina, who found that innovation strategies such as ATM usage contribute to the bank profitability. So lastly, which is the third response on internet banking on bank performance. So from the table, we can see majority of respondents, which is 73.5%, strongly agree that internet banking is one of the bank services that is actively used by the customer, which lead to the good bank performance. So on the other hand, about 19.1% of the respondents agree that internet banking can lead to the higher bank performance. So only 7.5% of respondents were neutral on whether internet banking influence a customer to actively use the service, which can lead to the higher bank performance. So we found that both disagree and strongly disagree illustrate 0% of respondents, which means that they believe that innovations such as internet banking will lead to the higher bank performance. Hence, we found that according to Van Yen and Pong in 2015, internet banking had impact on bank profitability through an increase of income from the service activities. So that's all from me. Thank you.
Assalamualaikum. My name is Farah Nordana binti Muhammad Tarmizi. My metric number is 2013518 and I am from section 3.
Now we proceed to the next part of discussion and critical analysis. Based on data that we collected, these are the results from the 68 respondents on the segment of mobile banking affects the banking sector.
Based on the graph, 73.53% of the respondents strongly agree that they use mobile banking actively, which leads to higher bank's performance. It indicates most of the respondents actively use mobile banking in their life, as people can do any transactions via mobile wherever they want. Subsequently, it shows that 20.59% of respondents agree with the statement, followed by 4.41% of people being neutral. Only a small number, which is 1 per 68 respondents, who disagree that mobile banking has been used actively.
Majority of the respondents strongly agree that mobile banking affects the banking sector. Mobile banking services that have been provided by all the banks from the past these years are able to influence people to use the services more actively. Mobile banking is defined as the act of making financial transactions on a mobile device such as phone, tablet, and etc. As we know nowadays, every person has at least one smartphone for them to use it in their daily life.
With the advent of mobile banking, people surely would prefer to use mobile banking services instead of going to the bank building to make any financial transactions, which cause them more difficulty. Through mobile banking, people can use bank services more easily. Increasing customer accessibility and in using their services would increase customer satisfaction as well as their performance. Besides, this also aligned with Johnson 2013. He mentioned that mobile banking is expected to yield positive and benefit the financial institutions by generating more income through commission and reducing expenses. Next, we move to the next innovation in the banking sector, which is smart cards. 70.59% of the respondents highly agree that smart cards that have been provided by banks, such as debit card, credit card, and electronic benefit transfer (EBT), are influencing them to use bank services more actively, which can make banks increase their performance. Besides, it indicates that there are 13 over 68 respondents, equal to 19.12% agreeing with the statement, and followed by 8.82% being neutral. Lastly, it shows that there are small figures that strongly disagree with the statement. Quoted by Wong Lim Piara 2008, the advantages of smart cards are that they are more versatile and powerful than magnetic stripe cards. The greater memory capacity of smart cards enables the card to perform multiple functionalities. Multiple functions that are embedded in one smart card able to influence people to use the services that are more efficient. Lastly, we move to the last part of discussion and critical analysis. Based on the data that we collected, there were few unexpected findings we figured out. As much as technology helps banks to increase their performance, there are also problems that are being concerned by customers. One of the issues is its security, especially hacking and scamming that have been happening a lot recently. 2021 state that hackers abroad have been able to pose as 75 bank customers here to make about $500,000 in fake credit card payments. These make customers worried that their money might get stolen by those irresponsible people. Next issue is most technologies require the internet in order to use the services. This causes problems to those who live in rural areas. They might face difficulties using the bank services. The internet could limit those people from accessing and using the services. Additionally, whenever people are in certain places that could barely get the strong internet connection, they could not make any transactions. In conclusion, there are many studies that have been done by other researchers that indicate that innovation of technology increases bank performance. For instance, cited from Charani and Abiyat 2018, Turkey showed an increase in their bank's performance from 1896 until 2005.
That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Noor Aisha binti Muhammad Musa, metric number 1919326 and from section 1. Moving on to the summary. This study is carried out to examine the effect of technology innovation in the financial industry on the banking sector, especially in this modern era. The technology innovation impact in the banking sector includes internet banking, smart cards such as debit and credit cards, mobile banking, automated teller machines, and investment in computer services. The main purpose of the implementation of technology innovation in the banking sector is that system payments and permanent payment instructions under the bank's supervision ensure their safety, efficiency, and trustworthiness while reducing cost, low risk, and saving customers time on using internet banking channels. A research conducted on the effect of technology innovation on the banking sector is divided into two parts. The first one is technological innovation and its relationship with bank performance, and we have found a positive and significant relationship between them. The second is the acceptance of innovation in the banking sector. Although there was emergence of doubts on the acceptance of these digital technologies at first, it was later found out that through a survey that the majority of the respondents agreed that digital transformation allows them to do their work easily and to carry out larger volume of work in a shorter time. Not only that, a survey was conducted on this study, and based on the answers from 68 respondents, it is found out that most of the respondents stated that they never experienced difficulties, while a few of them contradicted. These rejections are due to problems related to the system of the application of mobile banking, such as customers exposed to risk in terms of their security, hacking and scamming, and a lack of accessibility of the internet for those who live in rural areas. However, despite all these challenges and difficulties that banks and customers face in developing technology in the banking system, it has still been proven that tech innovation helps a lot in increasing bank performance. In a nutshell, this study is intended to contribute to the future literature by focusing on this essential topic for the banking sector. In conclusion, technology is essentially responsible for bank survival nowadays. Better tools for analyzing creditworthy customers, preserving customer information, and securing all of the deal information that, if within the wrong hands, could cost us innumerable dollars are developed because of technological advancement. However, as a coin has two sides, technology also has its two sides in the banking sector, which are the positive and negative sides. A number of the negative effects of the technology on the banking sector include job losses because of automation, the threat of cyber attacks, which might end in the loss of lots of data in a matter of seconds, and citizens becoming more negligent, leading to the loss of non public and sensitive information. But in the end, we cannot dispute that technological advancement in the banking sector have brought ease, speed, time savings, and lower costs to both individuals and banks. That's all from me. Thank you very much.